everyone. It's so lovely to be here again. I mean, out of habit, I might just launch into a big macroeconomic gold discussion. But that would rob me of the opportunity to tell you about the company that I did leave, that I did sell my business for to a very esteemed buyer. And I did that to join West Red Lake. Over the course of my newsletter writing years, chasing returns in lots of different areas of mining, I realized that one of the best arenas to focus on for moderating your risk while still holding on to that upside that we love and that we're here for in a gold market is with companies that are creating new gold production, right? And so when you're going from zero to production, putting your first mine into production, that can generate some pretty fantastic returns and has that moderated risk profile relative to exploration. So that was sort of the foundation. Now, West Red Lake is an unusual fish in that sea because it's a very accelerated path towards first production. Here's the key points. I am going to say a lot in the next 10 minutes. You guys are used to that from hearing me speak. I generally say a lot. So please come by and talk to me more. There's a lot that's going on with this story, and I'm going to try and get through it. So from an investor perspective, really the key points is that we are about to start producing gold. We're going to process a bulk sample in March. That will produce gold. And then we are going to roll into production processing so that by June we are producing gold. From there, we're going to ramp up through the rest of the year to our nameplate capacity. So we have gold production, it's around the corner, and it's from a high-grade gold mine in Canada. That's an unusual beast, new gold production in 2025. There's no permitting risk on this story. We're fully permitted. There's not a lot, the build is complete. There's no questions left about how we're going to build it or to be honest, how we're going to finance building it because the build is complete. The prior operator spent $350 million on the site. We have invested $100 million in the last year to get it ready to go. And we just issued the study that explains what the mine's going to be, how we're going to do it over the mine life that it described. Now, I will say that there was some extreme conservatism in that mine plan. So it is what that pre-feasibility study determined was that even from a really conservative standpoint, it makes a lot of sense to restart this mine right now. But gold hit new highs yesterday. I don't know if anybody else noticed. It seemed to pass by without much comment, but gold is doing phenomenally well. So I don't think extreme conservatism really applies at this moment. So the mine is more than the pre-feasibility study outlines, and it's more starting right now. So that's a really important distinction, and I'll talk about that a bit. That bulk sample is underway, and we have the cash. We're well funded to do this. We did a lot of equity raising last year. We accessed $35 million US as a debt facility just at the beginning of this year. We have the money to do the plans. The Madson Mine. This is in Red Lake, Ontario, the western edge of Ontario, really high-grade gold district. This is a mine that failed 2.5 years ago after Pure Gold did a bunch of very good work defining a resource and then made some mistakes as they were building and operating a mine on that resource. This slide takes us through what we are doing at the Madson Mine that gives us confidence that we're going to be able to operate this mine successfully when the prior operators did not. I could spend 20 minutes talking through these points alone, which of course I don't have time to do. It really leans on definition drilling. Pure Gold mined a narrow vein, high-grade gold resource based on drill holes that were 20 meters apart. And that's just not how you address the risk of resource continuity in that kind of system. Translating that into sort of layman's terms, you need more drill holes. So we have drilled 58,000 meters into just the tons that we plan to mine in the first 18 months of this operation already. And that means that we have tightened drill hole spacing up to like 6 or 7 meters. We know where the gold is. Accurate understanding of where the gold is fundamental to why we think we're going to be able to operate this mine successfully. And then it rolls from there. Pure Gold failed to deliver grade as needed. They delivered like 3.5 grams to the mill instead of 9. We think definition drilling and experienced mining is going to address that problem. The other thing that stymied the prior operator was cost. They really let costs get out of control. One driver of that is that they tried to build the mine on as small a budget as possible. To do that, there were several capital projects that would have made for a more efficient mine that they didn't do because they didn't want to spend the money. We have spent the last year doing a bunch of those projects, so we're setting ourselves up for efficient operations. So we're addressing the grade, we're addressing the cost, and we've done that work already. I'm not going to dive into this slide right now. This is a set of images that shows what that definition drilling does. Pure Gold essentially, this is like one tiny part of the resource. They essentially tried to mine the entire resource envelope, which is really that purple ribbon. But in Red Lake, the gold isn't nicely, evenly spread through the entire resource envelope. Instead, it's in lenses. The lenses are really rich, but if you mine the entire resource envelope and a bit more, because your mining methods aren't super selective, then you end up mining a lot of unmineralized material. The definition drilling is so that we can define the red blobs. I'm using very technical language there. The red blobs are the lenses. They sit within the purple ribbon. The purple ribbon is accurate, but you want to mine the red blobs and not the entire purple ribbon. That's what the definition drilling does. And we will always have 1 or 2 drill rigs underground at the Madson Mine, as long as the mine is operating, to make sure that we have this accuracy in terms of where the gold is. In terms of those capital projects that didn't get done, one of them is the connection drift. Pure Gold Collard built a fantastic new portal called the East Portal, and then they decided not to use it because they didn't want to spend the money to get down into the resource from the east side. They went over and used the West Portal. Really inefficient. It's small. You have to cross public roads. You have to dump and reload the ore. The tunnels are windy. We're spending $10 million, and we're 70% complete on a 1.2 kilometer tunnel that connects the 2 sides of the mine. Set up an efficient mine, because efficiency is cost control in mining. Test mining, there's 2 really important reasons to test mine. One is to practice before you do. It takes time to ramp crews up so that they operate safely, efficiently, and accurately in an underground mine. We've been doing that ramp up. We've been making sure that, everything is working as needed over the last few months. So that's really important. When we get to production, we are going to hit the ground running. Secondly, if the whole premise is that we can deliver the grade that the prior operator couldn't deliver, let's show people that we can do that. So we're stockpiling bulk samples on the surface. We're going to process those through the mill in March, and I think those results at the beginning of April will be really important because they'll underline the thesis at play here. Now, we did a huge amount of work in 2024 to get ourselves here. We're right on the cusp of production. We just issued a pre-feasibility study. Seems like an odd order to do things in, but that's just the nature of this asset. We had to do everything all at the same time. So here's the mine plan. We just put it out last week. Like I said before, it's a really conservative look at what this mine is, but it still makes a lot of sense, even based on that extreme conservatism. So $315 million net present value, a 255% IRR because the money is already spent, average head grade above 8 grams, $70 million in annual free cash flow over the 6 years of operation. Now, here's a little chart of gold production and grade. You can see that the grade is really consistent. It does kick up near the end of the mine, and that's because we get down to an area called the 8 zone. It's at the bottom of the shaft that already exists, and it's like 3 times the grade of the rest. What I want to highlight here is that we think that we see our ability in hand to increase the grade profile in the middle of this chart, starting in a few years, because there's areas that we know of that aren't in the mine plan. So we see the grade profile bumping up earlier in this chart. This is what I'd love to chat with all of you about if you can come by the booth. This is all of the reasons why the mine that we're starting now is going to be better than the mine that the pre-feasibility study outlined. It's kind of funny to put out a big, important mine plan and immediately be like, yeah, but that's not exactly what we're doing. And the difference is literally all upside because SRK, who did the study, used a really conservative gold price when they were deciding what of the resource was economic to mine, made it into the reserve. That really conservative gold price left a lot on the table, and we're going to capture that in a PEA this year so everybody understands the reality of Madson and that it's more than the PFS, which was strong, put on the table. This is the cash flow profile. All of that upside should mean that the dashed line, annual cash flow, doesn't dip in the middle and is higher. And I'd love to talk to you all through that because there's some really clear reasons, I think, to back up that concept. Here's the people who are doing it. Shane Williams, a phenomenal leader, has built mines all around the world. On the board, Tony McCooch and Duncan Middlemiss definitely deserve note as very experienced, sort of famous Canadian mine builders. Really strong team. And this is our share structure. Importantly, $190 million market cap today, $315 million NPV on that conservative look at the mine, and we're going into production. So are you supposed to get a 1x multiple on that value of your asset as a producer? That's generally the rule of thumb. So I think there's a lot of upside even with the conservative plan. Did you like how quick? I spent a whole minute at the beginning saying that I was glad to be here, so that's why I spoke for an extra 40 seconds. Thank you, everyone. Thank you so much. So good to see you all.